Dan Dickson with Endeavour Silver. We have our two operating assets in Mexico and one that we're developing, hoping to go into operation in hopefully less than 2 months. We're focused on commissioning. Ultimately, the Terronera project will double our production and hopefully cut our cost profile in half.
A nice big step change for you there. But first things first, Q3 numbers out. What can you tell us?
Yeah, I think it's really kind of down the runway. We beat analyst consensus by a penny. I'm not sure if that means a lot. Ultimately, we had a trunnion failure in Q3, which reduced our operating capacity at Guanaceví, ultimately impacted our production profile for the quarter. We did a little bit better than what we guided the market in August from a production standpoint. I think that was reflected into our earnings for Q3. So really, I think the marketplace is waiting for Terronera to come online. Earnings is a little bit of the story, but ultimately it's the focus will be on Terronera and how it goes into commissioning and then ramp up.
Well, you've had a good response from the market this year, right? And lastly, especially as silver prices kind of move through the phases, that over $32 consistently. What's been important for you this year while you're waiting for Terronera to kind of come online? What have you been focused on? Is it just head down, more of the same, bring that cash in?
Yeah, there's a couple things actually. It is head down and make sure bring that cash in. Prices have significantly increased this year, so it's helped bring that cash in or maintain that cash. Obviously, with the trunnion failure at Guanaceví in Q3, that kind of muted that a little bit, and we'd be in a better position, but we're in very strong position for Terronera. There's other things that we've been doing kind of head down at the operations, but also we have a project called Pizzeria. We're trying to find what comes in behind Terronera. Our goal is to be a senior silver producer. We think that's 25 million ounces of silver. Terronera takes us to 15 million silver equivalent ounces. And so we've been doing a lot of work at Pizzeria. We've got news that will come out on Pizzeria in the coming weeks. We're excited about that. So sometimes it's head down. It's just, we got to execute. And then ultimately you're always looking at having kind of one eye on the future and what comes after Terronera. So market expects continual growth or continuous improvement, and we try to do that internally ourselves.
Okay, so operationally, things seem to be moving along smoothly. Can I talk about balance sheet, the numbers, etc., in terms of what this quarterly injection of cash does for you, what it signals to your institutional shareholders, how you treat it, and then how you sort of clean up the balance sheet as you go along?
Yeah, so at the end of Q3, we ended up with $55 million in cash. We had another $35 million on our credit facility, the project loan for Terronera, that we pulled subsequent to quarter end. So in early October, we pulled it. It's ultimately $90 million available to us from a cash standpoint. The Terronera project itself is going to be $271 million build. We've spent $258 million. Some of that includes prepaids and advances to vendors that will kind of roll off as we come into commissioning over the next 2 months. So we feel like we're in a really good position from a balance sheet standpoint. Now, if you look at the debt that we've incurred to build Terronera, we have $120 million of debt. Cash flow after taxes in year one at these prices at Terronera will approach $120 million. So the plan ultimately, will be to pay off that debt in relatively short order. It's an 8-year term loan, but there's cash sweeps, and ultimately with higher prices, it allows us to pay it back a lot quicker.
Do you want to pay it back quickly? I mean, it's always having a bit of debt on the balance sheet is not a bad thing.
No, it's not bad. Ultimately, I think you look at refinancing potentially if you can, to lower that cost of capital. But we do have, like I say, the Pizzeria project coming in behind it. With Pizzeria coming in, we will have use for cash flow, absolutely. Use for that cash and cash flow.
Right. Okay. And can we get into a bit of detail about Pizzeria? Because I think people are sort of, they understand what's going on at the moment operationally, and though Terronera is kind of coming through, and we've talked about it in the past. Because I'm trying to. I guess what I'm trying to do, we've seen a couple of huge silver M&A transactions happen recently, and they will have kind of set themselves up for that. Can you sort of explain your thought process on, you know, do you intend to be a buyer or a seller
Yep.
of what you have on the table at the moment?
I think the easiest way to answer that is ultimately we want to grow the company. We want assets that other people want. That doesn't mean we want to sell them, but it means that we have Class A assets. I think there's a sense of duty in our company, just with the founders and ultimately Brad Cook, the original founder and chairman who passed away 2 years ago, to continue to grow. We like the path that's in front of us. We think Terronera and Pizzeria together make it for a very compelling silver story, and we're a very small space. I mean, with these two M&As that have occurred in Q3 and ultimately we close in the new year, it really takes our space down by 20% of investable silver assets, primary silver producing assets. So you really got two in the States, First Majestic out of Vancouver like us, Pan American Silver, but Pan American is 22% of their revenue mix is silver. Maybe it's picked up a little bit, but it's hard to find primary silver assets. And we have two world-class ones in our portfolio with Terronera, and ultimately we think Pizzeria will come in behind that. And whether we find more, whether somebody comes and wants to talk to us about those assets, we're always open, but it's one way or the other. And I'm kind of agnostic between the two. And but I say, there's a bit of a sensitivity to continue to grow this company.
Right. Okay. Which I wonder if that also makes sense in the sense that with two big deals have just happened, it kind of reduces the number of buyers out there, and there's from a not a very big pool already.
Well, and absolutely,
yeah,
absolutely. And as those buyers grow themselves, they have to buy things that are relevant. So you can't buy 10% of the production that you're already occurring. You're looking for bigger, better assets, and you're trying to improve your own portfolio. So whether that means significant increase in production, ultimately what you should be looking for is free cash flow, right? Like at the end of the day, it's growth and free cash flow. And sometimes in our space, we worry about production for the sake of production, and ultimately in a growth and expanding silver price, it that works. But there's going to be a day where that cycle turns, and then it's going to be a contraction of silver price, and you want assets that can make it through those contraction periods, right? So it's a balancing act.
I know, but it sounds so simple to say, but most people in this space seem to forget about making money.
Yeah, no, absolutely.
Right. So let's look at maybe how some money can kind of come cascading down through the sector, either through, and this affects you too, right? In terms of the behavior of the sector. I'm going to stick specifically with silver here. So we've got to have a view on the macro at the moment. Central banks have been buying gold and silver for fun for the last 2 years. Does that continue? Does the US elections affect that? Because of I guess the ramifications of what that could mean in terms of this rather confrontational environment and economic system we find ourselves in at the moment.
Yeah, it's hard to say does that continue. I think the long-term trend's intact in the fact that we're seeing deglobalization. I think you are seeing various countries move away from the US dollar. I think all the rhetoric that we hear coming out of the US pushes that. And ultimately, the investment side of gold, which silver follows, so the monetary aspect of silver, I don't think's been here for the last 2 years. I think the movement in silver, let me clarify that, for the last 2 years up until maybe a month or 2 months ago when we saw this move from 26 to 32, 34. I think the investment side for gold's been there because of central banks. The growth in silver has come from the industrial standpoint. So the
percentage, do you know?
In the last 15 years, silver has gone from about 250 million ounces used for industrial purposes to about 550 million ounces. Supply of silver from mines is about 800 million ounces, and that's unchanged over the last 15 years. A little bit of movement. So the investment side for silver as a precious metal, as a monetary asset, is picked up, I'd say, in the last 3 to 6 months. And that's why we've seen this move, a quick move through 32 up to 35. And now I think the market's just trying to understand what's happening with the US election and breathe, and then really figure out a direction on the short term. The long-term aspect to silver, industrial demand is going to continue to grow. I think there's a lot of data on that. And then it's a question of when the US side of things or Western civilization starts making investments from a gold and silver standpoint. I think that really pushes gold prices higher, and then ultimately silver prices will follow. And we'll see new all-time highs on silver. And I think that's an easy thing to say. It's just, what's that timeline, right? Like, we know we're going to push through $50 silver one day. Is it going to be 10 years from now, 2 years from now, or 1 year from now? And I think that's sooner rather than later, just because of the environment it is. It's just figure out what's the political landscape, what's the geopolitical tensions that are going to occur over the next kind of 6 to 18 months, if that's fair.
Okay. And do you think, like, when we see these mergers of equals or these acquisitions and stuff, it's like, it's not like a whole bunch of new ounces coming in the market. It's the same ounces under the same roof, right? And sure, there'll be some kind of blue sky there. So is this a moment where perhaps the producers get to control the market somewhat, in the sense that I think developers are looking to be bought, or at least have money thrown at them for what they need to do. And explorers, as always, constantly seeking money, which just isn't there from the moment from the usual sources, from whether it be from the market or any of these kind of institutional funds. It's kind of like you're all going to have a big party together and work out who wants to buy what and what's real and what's not, to be able to add new answers to the space if the industrial demand is going to continue to increase. So how do you kind of self-regulate the economics around the growth component of what silver is going to need to deliver?
It's very interesting. In the silver space, it's a little bit more difficult because only 30% of that silver supply comes from a primary silver asset, where the predominant mix of revenue is silver. So we're a little bit different in that sense. But even in our space, there's only a handful of developers coming on, or I'd even say advanced exploration stage. There really is a glut, and it's because over the last 10 years, there hasn't been the investments in the junior exploration companies that make those discoveries. The bigger mining companies' discovery records probably less than what juniors are, and there's a reason why there's bifurcation between our industry, between developers and explorers, and ultimately the actual miners. And will we self-regulate? Ultimately, there will be fewer assets to chase from a development standpoint. But there's also...
Is that because not all developers' numbers are as advertised? If you went and look for an acquisition, you think, do you expect, let's say if you look at 10 assets, you go, do you expect that all 10 assets will stand up to scrutiny?
No, absolutely not. But I do think just there's not 10 assets out there because there hasn't been the exploration dollars spent at the junior level. So 10 years ago, when the exploration companies were getting investment and ultimately be able to raise capital, you might have had 10. I think that's now probably 3 out of 10 ratio, so to speak. But from our standpoint, on a silver standpoint and silver pure standpoint, you only have about 4 or 5 real operating silver companies, maybe 6, you could argue. So there's not a lot of operating companies chasing those development assets either in our space. So I think ultimately the buyer still has that power today, that you get a better purchase price if you're buying a silver asset that you believe in than 10 years ago. Because we are building cash on our balance sheets, and you can use that cash or shares to buy that 1 or 2 developers. We're in such a precarious spot right now in our space. There just isn't a lot coming on from a growth standpoint. And
yeah, it's good. It's to be expected, right?
Yeah, I would say the 2 M&A deals is to add growth, but it doesn't add long-term growth. They're not new assets that need to be developed. It just puts cash flow into a company that, if they're separated, ultimately those deals are done for efficiency purposes, consolidation and reducing costs, creating economies of scale. It's not, hey, we're going to bring an expertise in it and grow those assets.
Yeah. The efficiency point is exactly right. It doesn't deliver new ounces in the long term. So what's the kind of give for these? Because you're in Mexico, right? I mean, we've got to talk about Mexico. Mexico elections, new presidenta, October 1st. Claudia Scheinbaum. She great expectations and some quite good signals early on. Is it still too early to kind of call how it's going to play out for you guys?
It is. It is. She took office, like you say, October 1st. There's been lots of meetings, and she's been putting various secretaries in place, and people are trying to still get a read based on the secretaries' past and comments they've made, trying to get meetings and to understand that. So I think we kind of have another 3 to 6 months, so to speak, where we really get to see what Claudia's mandate really is. And I think things have been positive in the first 6 weeks of her in office, and obviously leading up to her taking the seat. But time will tell.
It's kind of interesting. You've got Mexico seems to be back in the game, which is great. It's been on for explorers, certainly been on pause for, well, AMLO was in there for 6 years, but definitely felt the ramifications of that since maybe beginning of 2021. Not a lot of money around, people struggling, just biding their time. Some companies will be able to survive that, and some won't. Some will have good. Some of those which won't will have good assets. They're kind of stranded though. You've got enough on your plate right now, but do you expect to see consolidation in the space? Would you be tempted yourselves?
Always tempted. I mean, I think we have to protect ourselves against that temptation sometimes, because as you say, it's like it's resource allocation. And obviously this year, as we touched on, it's all been about Terronera and making sure we execute at Terronera. We're coming to the end of that. And naturally in the investment community, it's like, now what? What do you got now? So the world continues to turn, and we're very excited about the Pizzeria asset. And as I say, we think it pairs really well with Terronera. And our plan this year was to spend $5 million, and we really started spending that in the back half of the year. As I say, we'll have news come out on Pizzeria and the plans for it in 2025 relatively shortly. So continue to be keeping the eye on what we have and the growth that we have, but you never want to take your eye off potential out there, because there's opportunities. And if you just ignore those opportunities, you're not going to find it, right? So ultimately we have a group that look at things, and we have to be smart. The acquisitions have to be accretive, and it has to make sense for shareholders. And again, it goes back to, are we chasing production ounces, or are we chasing free cash flow? And we have a view, and I do believe silver is going to be higher, but there'll be a time when silver pulls back. So the asset's got to be a good asset. You don't want to just pick up production and then in 4 years you're trading dollars. And it's not fun. It's not good for the investors, and it makes for sleepless nights.
I mean, is that any kind of key takeaway and learning of the last, say, 5 years? There's a point at which in 2020 there's more money than sense in the sector, and money is easy to come by. People place bets accordingly. Investors behaved accordingly. You as a CEO, or new CEO, but what are the key learnings for you?
Yeah, I laugh. I mean, 5 years, it probably takes me longer to learn. So it's probably 18 years. Like, I was CFO for 15 years with Endeavour, right? And I'm an accountant by trade. And so I'd probably lean towards free cash flow and a bit more conservative than some. But it's over time, and ultimately our industry, people have been frustrated with the rate of return and destruction of capital over the last 15 years in the gold space. And we've seen a lot of investment in gold, less in the equities, and there was a disconnect there. I think that's kind of contracting a little bit, and we're seeing that as balance sheets grow, people are more willing to invest in those companies. So it'll ebb and flow. We'll make dumb decisions as an industry. We hope Endeavour stays away from some of those decisions, and easier said than done. And it's not to say we haven't made some poor decisions in the past. We have, but we've hopefully learned from that. We'll see.
It's a different set of decision making from CFO to CEO. Is that?
Yeah, it is.
Have you enjoyed it?
You know what? I always say, like, 15 years of being the chief financial officer, I think at the end of that tenure, I really knew my job extremely well. And ultimately, with a CFO position, you got a lot of deadlines, whether it's a weekly, monthly, quarterly, and then annually. And you're always dealing with lawyers and accountants and very sophisticated people. And then as a CEO, you kind of come in and your day is not the same. You don't have a timeline and deadline. You're trying to reach out and create work yourself. And you're meeting the characters all up and down the gambit. And I'd say the first 6 to 12 months in this position, a little bit more anxiety and questioning. And as time goes, I've really enjoyed it. I think I love meeting people, more people, and 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 a little bit more.
Sorry, Dan, if I may interrupt, because you made me think that when it comes to the kind of the conversations that you're having, I know you've been traveling extensively recently, and you're a $1 billion plus company, in a commodity which people are interested in at the moment. You to kind of make this big step change, which you can do with Terronera in terms of the production, the cash flows, etc. Are you going to have to look quite hard at the kind of structure and makeup of your share register in terms of who's in this thing, where are they from, and therefore what their expectations are?
Yeah, I mean, ultimately that share register will turn over in itself as we become a bigger producer, and ultimately Terronera has a 10-year reserve life. And some of the funds weren't able to invest in Endeavour just because Baldio's and Guanaceví have historically had only 2 years of reserves. So now we've operated there for 18 years and 17 years respectively. But often the question from some funds like, oh, we like it, we understand it, and it's an epithermal system, but how many years do you actually have left? I think with Terronera, you have that 10-year runway, and ultimately we think we'll be there 15, 20 years. With Pizzeria, they understand that's a large asset, so our register is going to completely change. I don't think that changes how we manage the company. I think we're still focused on growing the company, improving that free cash flow. There'll be a day that comes that some of our shareholders will ask for dividends, and that'll be a great day. But we're still 5 years out from that. Like Terronera is coming online now, but Pizzeria, if we move forward with that, that ends up being another 2-year build. Paying off that capital structure if we use some debt, and then ultimately figuring out what we do with that cash flow.
And so where's the best of liquidity coming from? In New York or Canada?
I would say Europe, to be honest. We've had a lot more inflow out of Europe than Canada, the United States. Not particularly sure why. I think in the US side of things, your fintechs or technology companies and other industries have continued to do extremely well, and ultimately Nvidia has done phenomenal. Apple's done phenomenal. I think when you're getting those returns, it stays there. Yeah. Now, the metal space has been doing very well as well, but I still think we're in the infancy of this run, and you'll get that redistribution of capital out of those other industries into our industry in hopefully in the next couple of years.
Yeah, I hope so too. I hope we do. I think there's been some money being taken off the table recently with, across the board, as it would be. And I think North America, tax loss season as well. But next year will be an interesting one for sure. And if we finish with Terronera, the timing is what precisely?
We're commissioning by the end of this year. So December we want to be commissioning, and that means from crusher all the way through onto the tailings dam. Ultimately, we've pre-commissioned our crusher, our grinding facility. The main bottleneck is our filter press. Ultimately, our expectation is that will be done in December and kind of work through some kinks, and then be able to, like I say, take rock from start to finish. And then it's a question of how long ramp up will be in Q1, and telling the market effectively 3 months. 3 weeks would have been nice. 3 months, and then into full production after that. So works.
Full nameplate production after 3 months.
It's aggressive, but at the same time, I think we're in a really good position.
Okay. Trunnion. Great word.
Sure. A lot of people in our companies learned a lot about trunnions over the last 3 months.
Yeah, I bet. Well, like, Dan, as ever, like it's quite, for me, I love these conversations because these are well-run companies, operating smoothly, delivering to the bottom line regularly, and really it's a conversation about what's the future bring us. As you say, that's what most investors want to focus on at this point with you guys, and it sounds like it's going to be a big year next year. So appreciate time today. Appreciate the update.
Yeah.
Thank you.
Thank you.